You know, I don't know what you would write, but I would just suggest that when you're tracking your mileage based on that, that you keep extremely detailed documented records. So if you're going to show houses, write who your prospective client is, showed houses to, or drove around to look at houses for comps in the area, drove around to look at houses that were listed for sale by owner. Whatever it is that you're doing, make sure that you just add in some detail there so that if this ever becomes your situation, that you have it documented. That was a horrible ruling, but there's not really a way to appeal a tax court ruling, which is why that is so important that you know what to track as you go. So, and then while we're talking about whether or not you can write off your whole car, I just had this happen this week. A client has an LLC, they file as an S corporation. They have for 3 years. They refuse to schedule tax planning appointments, and they just send me their tax stuff at tax time. And then they get pissed off when their taxes look different than they expected. I don't know how you have an expectation if you don't have that conversation with someone ahead of time, but they bought a car or a brand new truck in 2019. And their intention was that they were going to write off a $58,000 purchase. And of course, that would zero out their income for their business. Now, that's all great and good, but doesn't get you off the hook for having to keep up with stuff. Okay. And especially if you have an LLC and you file as an S corp. If that is the situation, your vehicle has to be in the name of your LLC for that to work. Typically, your insurance carrier may require that you have commercial insurance because it's in a commercial entity. Your vehicle then becomes subject to business personal property tax. So you're going to pay property taxes every year on your vehicle that you don't pay if it's just in your name. On top of that, if you are an LLC filing as an S corp and you do that and you do it all right, if you drive that vehicle for any personal reasons, you have to take the number of personal miles times the standard mileage rate and put that in your W-2 income. So all of those things made a lot of people want to just throw up just hearing them. So you have to know how the rules work if you're going to buy a vehicle in your business and what that looks like. You need to look at all the things, not just, holy crap, I can write off my $50,000 car as a business expense. So before you decide that the actual expense method is the way you want to go, definitely talk to your tax advisor. If you don't have one, my schedule is online at my website, and we can have those conversations to make sure that you make the most informed all around decision, because your taxes are just one small piece of that. Next expense you guys have, advertising. Advertising, auto, and meals are the 3 most audited categories on any tax return. Why? Number 1, auto, because people do things like what I just talked about. Advertising, because it becomes the catch-all. If we want to do something and we want to make it a business expense, we just call it advertising. Everything we do could be advertising. I went to whatever place and I talked to 3 people about it. So whatever I bought there, I'm writing off as advertising because I wouldn't have been able to talk to those people if I hadn't gone there. So it becomes a catch-all for a lot of expenses. So I would suggest that we actually use the categories for what they truly are, because when a return is chosen for audit, it is typically because they run it through the computer and they scan it for a couple of things. Number 1, that industry code at the top, that 6-digit code. It averages across what the industry standard is by category. And if there are significant anomalies in your numbers versus the average, it will kick your return out to be audited for that category. The other way is if it looks at your income and your income's 100 grand and you have one category that is disproportionately huge compared to the rest of them, it will kick that out for audit. Advertising is a big one because, like I said, it tends to be a catch-all. So if you put a lot of stuff in that category, then you may trigger an audit. Even if they make no adjustments, it is not fun to go through an audit. So what we usually like to put in there would be, if you get your car wrapped or you have signage for your car, you would put that under advertising. Social media ads go there. Networking group fees can go there, but not the meals if you're paying for your food at those events. If you have yard signs, if you pay for leads, some of the realtors that I work with, they advertise on Trulia and Zillow, and they pay a lot of money for that. I'm not really sure they're measuring their return on investment, but if you notice that your advertising category, once you pay for all the things, gets to be super large, what we typically do is we'll break those things out. So particularly I had this commercial realtor, and he was doing a lot on Zillow, Trulia. It seems like he had one or two others. So what we did was we had advertising, which was like social media ads. And then on other expenses, we broke those others out and literally just listed Zillow and the line item, so that it doesn't have that one number on that one line to trigger an audit. Now, a lot of you are going to think that you can write off your clothes here. This is a really, no. You're not supposed to write off your clothes unless you have a uniform, and they're very specific about what constitutes a uniform and who is required to wear one. Real estate agents are not required to wear a uniform. They reserve those for things like military, firefighters, police officers, people that literally have to wear a uniform that they wouldn't just walk around in. You could say, well, nurses, because they wear scrubs, except lots of people wear scrubs now, like just for fun. I'm not sure why. I don't understand it, but you can't do it. So how do you get around that? Particularly if you have logo type clothes. So if you can see my shirt here, it has my company logo and says DD Stone on it. This apparently is live on everywhere. And I have pictures. My website is done with my shirt. So I put that in advertising, but it has to be branded to your business. It can't just be like Kiss a Realtor, or, I work with a lot of essential oil people, and they have all these little t-shirts that are super cute, and they say spoiled with the oil real big. Can't just be some random generic thing. It truly has to be like branded apparel for you to do that. And branding Nike is probably not helping your business. So it literally needs to be geared toward your business. But I would stick those in advertising if you're going to write those off. And then I would just make sure that you have a lot of pictures that show that as an advertising, so that if it got questioned, you could be like, nope, here you go. Now we're going to talk about meals. Meals were a big controversy with the 2017 Tax Cuts and Jobs Act that went into effect in 2018. So originally it said you could only take meals if they were travel meals, which meant away from home overnight on business. And overnight is like more than 5 hours. It's so weird. Like the rules are super specific. And then in October of 2018, because we wouldn't want them to think of stuff timely, so we went for 9 full months of 2018, thinking that only travel meals counted. In October of 2018, they said, oops, our bad. All your business meals count, but they have to be, they still have specific rules with those. And let me just pull up a little thing here. There are certain criteria that you have to meet to make those meals count. Number one, you cannot be eating by yourself. It is not grab and go lunch at the drive-through while you're between showings. It literally has to be, you are with a prospective client or a business partner or referral source or something of that nature. It has to be ordinary and necessary. So if you are making 20 grand a year, you probably can't go to Three Forks for your business lunches. You have to be present. You can't pay for somebody else's lunch if you're not going to be there and count that as a business meal. And if you have that meal at an entertainment venue, the meal portion has to be paid for separately or be listed separately on the receipts. So like if you once we're permitted to go back to sporting events, if you wanted to take a client to a baseball game or a football game, or something of that nature, then you could write off the cost of any food that you purchase at the game, but not the tickets for that game. And whether your meals are travel meals or they are, client lunches or meetings of that nature, then they are subject to a 50% limitation. So you're going to track the full amount, including your tip, including alcohol. I get this question for some reason a lot. People are under the impression that alcohol can't be counted as meals, but it can. Fairly certain Congress is always drunk when they write the rules. So just keep track of those things. Now, the exceptions to being able to write them off 100% would be if you have some big event and it's open to the public, everybody can come. For example, if they had this class in person and there was food there, 100% of that food would be able to be written off. If you take food to an open house, you would be able to do that. I'm not sure why you would do that and have, cookie crumbles in the carpet, but whatever. Those are just examples of ways that you could take meals or food at 100%. Otherwise, they're limited to that 50%. Be careful about that so you don't, oddly enough, even though this category is one of the most audited categories, you don't have to have a receipt for meals if they are under $75 per occurrence. This is the only category you don't have to have the receipt for, and it's only if it's under $75. You do still have to keep records and say who you went with, where you went, how much it was, when it was, and what the business purpose of that meal and meeting were. So that cuts down on a little bit of record keeping for you. Now, I touched on this a little bit. We're going to get into like the details of expenses now that we've talked about the top 3 most audited categories of expenses, and probably some of your larger expenses, quite frankly. I touched on this a second ago when we were talking about the PPP, about bank accounts. Now, historically, and by historically, I mean like literally for the past 15 years, we've said, hey, you need a separate bank account for your business. It can just be a separate personal account that you only use for business. That's all good and fine. That still holds true. For the IRS, that still holds true. You need a separate bank account. Some of you are like making faces at me right now, even though I can't see you. I know that that's happening because I talk enough at these things to go, oh, people are like, another bank account. I promise you can do it. You want to keep that separate because if you're ever audited, they're going to ask for your business bank statements. If you're a Schedule C, they'll probably also ask for your personal bank statements. But as long as you're doing everything correctly on the business, those personal ones will just kind of be shoved over to the side. You don't want to commingle. I like to use this example because people don't sometimes realize what running everything through one account looks like. But I had a lady with a daycare. She had a bank account for her daycare. She actually had an LLC for her daycare. So she had an LLC bank account for her daycare, but she was running personal stuff through the daycare bank account. I'm doing her books to get ready for her tax return. And one of the charges on her business bank account, which I had told her many times not to commingle with, was to condom sense. Now, first of all, as your accountant, I really don't need to know what you're doing outside of work because I don't care. And I don't want to have to wonder about, I don't want to know. More importantly, though, the government is also going to see that. And when you have a daycare, I mean, think about the implications of shopping at that store through your daycare. Like, whoa. So just don't do it. Keep business to business and run it through there. Now, if you have a separate account that you use just for business, you can deduct any bank service fees that you get charged. I mean, I would try to find a free checking account if you can, but if not, and you have fees, you can deduct those as long as it's specifically a business account. What 2020 has revealed to us, though, is it probably behooves you to go to your bank and find out if you can open a bank account that is literally a business checking account that is your name, DBA your name, or if you go down to the county and register yourself as your own DBA and get an actual business bank account. I don't want to be labeled necessarily a cynic, but I'm okay with it. I've probably been called worse this week. If you get on my Facebook, there's people that think I'm a conspiracy theorist, but so far the government has never done anything that I really deem to be in our favor. And I don't think this will be the only pandemic we ever have. It was way too easy for them to shut us down, to think that it won't happen again in the future. And banks literally refused to process PPP loan applications if you didn't have an actual business checking account. So I would say, in planning for the future, it's probably in your best interest to just go ahead and get an assumed name if you have to, and open an actual business checking account at your bank. And again, for small, everybody probably on this call, including myself, qualifies as what they deem a micro business. You're going to be better off with a small local bank that you can actually build a relationship with, because Bank of America, hate to burst your bubble, does not give a crap about you. Chase, I bank at Chase, and I had the same, like, I have an LLC bank account, and I had hell trying to do any of those things through Chase. So maybe rethink how your banking structure is set up. And if you don't have a separate account already, just go ahead and go and get one, and go ahead and get it as a business account. Next thing, gifts. Some of you may not know there is a gift limit. This part of the tax code was literally written in 1984. The gift limit is $25 per person per year. If you have somebody buy a $500,000 house and you give them a $25 gift, I'm not really sure what they're thinking, but for most of us, you can't go to a birthday party with a $25 gift today. So what we usually do is we usually put it on there anyway, but know that if you get audited, they're going to disallow all but $25 of it. Referral fees that you probably aren't paying, of course, to anyone. Put them in their own separate category under commissions on your tax return versus gifts, because there's not a limit there. Computer and internet. That would literally be everything except your actual computer, because your computer is technically an asset that you depreciate, but you can write off a computer if you use it for business. Same with a tablet, iPad, camera, drone, cell phone, things like that. If it's only partly used for business, then you take the business use percentage, and that is, well, it's pretty much a guessing game. And it's pretty hard to prove, even for the IRS, what percentage of the time you use your computer for business versus not business. So just take a percentage of those things. Now, the other thing that you would put under this category is a percentage of your home internet. Usually when I get new clients, what I find is people are deducting their home internet under the business use of home. Well, if you're using 10% of your house for business as an office, then, and you're paying $500 a year for internet, you're only getting to take $50 off as business use of home. Internet, you can't do your business without. And you're using that internet, whether you're working at the dining room table, in bed late at night, whatever that looks like. So what we do is we take that internet portion of the bill out, and we take half. Don't take more than half, because even homeless people in America have access to internet. I can't make this up. I've seen it in Washington, D.C. But we take half and we put it under computer and internet directly on the Schedule C. It gets you a higher deduction, and it's valid. Other things are dues and subscriptions. So this would be any industry-specific groups, any professional publications, business magazines, things of that nature. Office expenses, pretty self-explanatory, paper, pens, ink, all that goodness. Professional development would be conferences, continuing education, things that you're required to have, but it doesn't just have to be things that are required to keep your licensing in place. You can attend business conferences, although y'all, I love to travel. I actually posted last night, Groupon has no trips. And I said, sadness, pure sadness. Like, I can't even pretend like I'm going to go somewhere right now, because everywhere you go, even Hawaii, they have a 14-day quarantine when you get there. And I don't know why you would pay to go sit in a hotel room. So I'm heartbroken over the fact that I can't travel and go to conferences, because, well, I mostly go for the travel, not for the conference. But you can, once we're allowed to be free Americans again, you can go to a business conference. It doesn't have to be real estate related. It can be business related, because you own a business, and you can write off that trip, but you could write off the conference ticket. Like, I go to the Inc. 5000 conferences a lot. It's $1,500 to go. So I can write off a $1,500 conference ticket, and then all the associated travel that goes with it. So when you think professional development, don't just think your continuing education hours. Think any business conference. Think books. If you're reading business books or biographies for people, I don't know what kind of things you read. Maybe not fiction. That's gonna be hard to justify, but I don't know. Those types of things could all go under professional development. Audible, if you have a subscription to Audible and you like to listen to things in the car, all those things would count. Professional fees. Professional fees are anything you pay to attorneys for providing legal advice for your business. This does not count for your divorce or other random questions, but business specific. Fees paid to an accountant or tax advisor that are directly related to your business. Most of the time when we have clients come in, you're probably not getting tax strategy if you have a W-2, right? If that's all you have, there's literally nothing to strategize around that. So make sure that you make the notes to say this was for my business, and then you can deduct those fees. Professional fees can also be for business coaches. Again, you want to be reasonable, because if you're only making $10,000 or $15,000 a year, and you're paying $6,000 to a business coach, you're going to need to be able to show some ramped up income pretty quickly in order to be able to justify that if it's ever questioned. Telephone would be your cell phone. The only way you can deduct cell phone the only way you can deduct a home office line, a landline, is if you have 2 lines and you can write off the cost of the second line. That's literally written into the tax code, but again, it's predated from cell phones. So most of the time when we talk about phone, we're talking about cell phone. So it would be your line and the business use percentage. How do you get to the business use percentage? That is a great question. Again, most people estimate, some people just take the whole thing. Some people just say 75% to 100%, and just pick a number and then go with that. If you're audited, I've literally never seen a single auditor who has tried to audit a cell phone by calling to check to see if every call was business or not. So just keep that in mind. Now, a couple of ways to maximize that deduction are to make sure that your phone is the primary line. Unless you have a compelling reason to let somebody else in your household be the primary number that has the bulk of the charges on your bill, then, and compelling being like they get a major discount through their employer or something, then I would make your line the primary and all the other lines be the add-a-line number, because you don't want to be the $9.99 add-a-line if yours is the one with the business expenses on it. Travel is my favorite category. Just like I just mentioned with the conferences and things like that, you can find a conference darn near anywhere that you want to go and buy a ticket. You should actually go to at least several sessions of it, but then it makes it where you can write that off. So several years ago, I went to the Fast Company Innovation Festival. It was a week-long conference in New York, and you got to go inside the headquarters of a ton of different companies like Instagram, Pinterest, Vimeo, Bleacher Report, all kinds of places behind the scenes, talk to the, CEOs, talk to founders. It was a really fun experience. It was a horrible conference, but it was a fun experience. And I got to ride off a week in New York. And the conference is, 8 hours a day. And the way it was structured, you had to skip some sessions, and eventually you get tired of running through Manhattan. So you just go, okay, I'm done for today. But you can write off travel by finding things like that. You guys could also look at like up and coming hotspots for real estate and go and meet with other agents in those areas and different things like that. If there are other areas of real estate you want to get into, go and check those things out, and you can deduct the travel. You just have to be able to show that there was a business reason why you did it. And if you happen to have a family that you take along with you, you can't write off the cost of your family. So let's say that I was going to Florida, which I was going until Key West made masks required on the beach. I don't even understand that, but anyhow, I was going to take my son. If we were going for a business reason, and I do have clients in Florida that we were going to see, I would not be able to write off my son's plane ticket. I would still be able to write off my hotel room because I'd have a hotel room whether someone was with me or not. And then I could write off my portion of the meals, which is pretty easy to tell with the receipt. Now with meals, you can also do another thing, which is per diem. So per diem is, there's a standard rate that the government sets on the GSA website. That's $1 per day for meals only if you're self-employed. Every year I have a conference in Salt Lake City, except for in 2020. I might be bitter about the lack of travel. But their per diem rate is $56 a day. So if I'm in a conference from 7 a.m. to 10 p.m., then I'm probably not spending $56 a day on food because, first of all, I'm stuck at a table all day long and I'm barely able to go to the bathroom. So I definitely don't have time to go and eat anything. So I can take $56 a day for food, even though I didn't spend $56. So that is something else to keep in mind. And that's on a per trip basis, not necessarily a per day basis. So if I'm gone for a week, I have to choose. Do my total meals cost more than the $56 a day, or am I better off taking per diem for that particular trip? So that's a way to kind of get a bigger deduction if you're traveling. Big category is contract labor versus employees. Some of you may hire people to help you. Some of the people you hire may actually be employees, not independent contractors. This is really important because it tends to be, if one person in an office gets busted for doing it wrong, they will typically look at all the other people in the office. And yes, they can tell that based on your 1099. So just consider that. If you're paying somebody occasionally to help you and they work for multiple people doing the same type of thing, have them invoice you, and then you can pay them on a 1099. If you have somebody coming in 3 or 4 days a week, or even 2 or 3 days a week, and you're telling them when to be there, what to do, you're overseeing all of that work, then they're probably an employee and you need to withhold taxes and do all the payroll reporting that comes along with that. Health insurance, if you're self-employed and you pay your own health insurance, then you can deduct that. And that comes off on the 1040 Schedule 1, not off of Schedule C. You have home office. So even though you may have office space, you can still take a home office deduction because probably a lot of the work that you do is after hours or on the weekends and probably from home. So if you have a space you use regularly and exclusively for business, you can take home office on your tax return. You can pay your kids. If your kids are between the ages of 7 and 18, you can pay your kids to help you with mailers. You can pay them to help you with a variety of things. They all have to be, things they help you with in your business. But if you're filing on a Schedule C, you can pay your kids and not have to withhold Social Security or Medicare tax. And you don't have to pay unemployment tax on them. You do have to issue them a W-2 at the end of the year, not a 1099. to make that legit, and they do need to keep a timesheet just like any other employee that you would pay. But that could be a huge deduction. Like my daughter is in club volleyball and she works for me. So we pay her, she can pay her own volleyball fees. So effectively you're taking something that's not deductible and turning it into a tax write-off. Okay, hair, nails, and clothes. We already talked about clothes and the only way that you can deduct those. You can't deduct them simply because you need to look like not a bum when you go show houses. Although it might help, theoretically, everyone must look like not a bum when they go to work. And so there's not a special rule just because we're self-employed. Hair and nails are never deductible. Those are personal. Same kind of reason though. You can't ever deduct those things. It's just personal. We assume that people want to look clean. Those are the biggest ones I see that people break the rules on, that and taking off all of their meals. But I'm going to switch over to a question, and then if anybody else has questions, post those, because I think we're nearly out of time and I miss seeing your faces. I'm just going to say that. Okay, so this person said, I know this is a silly question, but write-off does not mean 100% money back. Like we should still be careful and cut expenses because we only get a portion. That is correct. So for every dollar you spend, you're saving maybe 20 to 25 cents per dollar in tax. So if you have $10,000 in expenses, you're only saving $2,000 in tax, which basically means you spent $8,000 that you may not have needed to. So you want, at the end of the day, you have to consider the whole economic aspect of it and not just what the tax savings of something is. Kind of like the thing where we talked about that truck earlier, right? Like you can buy a truck and do that, but what are all the other things that come around that? Your tax rate's not 100%. And so your goal is to make as much profit as you can and keep as much money as you can. The idea in a tax strategy is to find ways that we could get everyday expenses deductible, such as with the travel or meals by taking out a referral source or a prospective client. So if you're going to be doing it anyway, is there a way we can make it a legitimate write-off and take advantage of that? Not let's spend extra money so we can pay less in tax. Okay, so what questions do we have? Anybody? I don't know how to see the questions either.
I don't see any on Facebook currently, but I did just ask if anybody has any. So
okay. All right. Another thing that you guys can do to save on taxes is, of course, a SEP. You can contribute to a SEP, and that's based on 25% of your net income after self-employment add back stuff. It's not dollar for dollar, just like anything, but you can still take advantage of that. So I have somebody right now that is probably putting $39,000 in a SEP and they'll save 10 grand in tax. So just kind of as an idea.
I did have a question for your contact info. So do you want to give that here at the end of the video?
Sure. So easiest way to get me is through email, especially right now, since we have the deadline tomorrow, and it's dstone@ddstone.com. So it's just the letter D, S-T-O-N-E, at DEEDEESTONE.com. And then my website is just ddstone.com, and you can always go on there. And we have the schedule online. So if you need to schedule a consultation, some of it needs to be updated. We started trying to roll out tax strategy packages at the beginning of the year. And then, well, 2020 erupted. So that kind of got put on hold. So if you have questions, you can always email me or schedule a call, whatever that looks like. If you send me an email and you want to get on the email list, one of the things that I guess kind of got forced to start doing during COVID, although I hear a lot of CPAs did not even try to do this, was sending out emails every couple of weeks with updates on kind of what's happening. So with all my clients, we're sending out emails right now. We're sending them out based on status of how many returns we have left and where they are kind of in the queue, and if we're going to get them done or extend or whatever. But we sent out a lot about, the PPP, the EIDL loans, all of that. The Secure Act, we'll be sending out emails about that. There's a bunch of different things that we're going to start sending out emails about, just to kind of ongoingly educate clients on tax stuff. So if you want to be a part of that, you can just get on that list as well.
Let's say a person loves some of your ideas and they're not going to be ready for tomorrow. How do they file an extension, and does that cost any money?
It does not cost any money. I would try to just go on like TurboTax or anything like that and just file an extension. You can always go to irs.gov and print out the extension form, which I believe is 4868, but let me double check what that form is. Yes, it's a 4868. You can print it off, fill it in, mail it, but you want to make sure you mail it certified return receipt, especially because the IRS has been closed down for 3 to 4 months. Most of their offices just reopened this week, and they have been storing all the paper incoming mail in storage trailers, which means by the time they get to yours, it may be December of next year, like 2021. You'll have already filed your taxes. They'll have already sent you a late notice. So I would definitely try to file it online. If you absolutely can't figure it out, send me an email. We can get it in there and e-file it for you, because it's super easy. But know that the extension is only an extension of time to file. It is not an extension of time to pay. So if you file an extension, but let's say you owe $10,000, if you don't pay that $10,000 tomorrow, then you're going to be accruing late payment penalties and interest, even though you have an extension. So just be aware of that. And you can also make a payment with your extension if you're ready. Now, if you owe money and you can't pay it yet, and it's due tomorrow, I would not file my tax return. I would file an extension. That will give you until October 15th to try to come up with the money. And if you don't come up with it by then you file the taxes and let them send you a bill. But I wouldn't trigger that notice any earlier than I had to. So.
Dee Dee, you also have a Facebook page, don't you, that they can follow?
I do. It is just Dee Dee Stone.
She has great information on there all the time, always putting good stuff out.
Thank you.
This has been an amazing class. Thank you so much. I know your time is precious with the deadline being tomorrow. So.
Yes, I would just like to I actually filed extensions for all my clients on April the 15th. So really I'm rushing because clients are nervous, not because I am worried about it. I don't trust that they won't screw this up somehow and send late filing notices if it was after April 15th. So we just preemptively did that. So
gotcha.
Yeah.
All right. Well, thank you for coming.
Thank you for having me. All right, next time, y'all, in person, face to face. I really need your.
Absolutely.
I know y'all are all looking forward to face days too. So.
Yes.
All right.
Thank you, Dee Dee. That was great.
Thank you.
Have a good day.
All right, you too.